Hi everyone, my name is Moe and welcome to another video of Income Investors. With me today is John Whitefoot, and today we're going to be talking about an exciting dividend play that you most likely have heard about. But before I go into any details, I want to let you know that investing comes with risk. No matter how safe an investment sounds, it comes with their risk involved. Anything you hear in this video is for information and educational purposes only. To learn more about risk involving investing, please see the description below. Consumer defensive blue chip stocks tend to do well no matter what the economic cycle is. And that's mainly because they provide product and services that most people need. They also have rock solid business and they make a lot of money. The downside with most blue chip stock is that they don't provide ultra high dividends. What they do have going for them is that they have history of raising dividends for many years, 10, 20, or even 30 years or more in several cases. And their share prices also tend to outperform the broader market. And that's what makes today's pick a great blue chip consumer defensive stock. It's PepsiCo Inc. I am sure you've heard about it. With this said, today we're going to be talking about PepsiCo. And I think it's also a great time to talk about it as summer is fast approaching. We are all in need of cold drink. John?
Yeah, thanks, Mo. And that's also what's kind of interesting about PepsiCo is most people, especially of like my generation, only think of PepsiCo as a pop company. But it's a lot more than that. Pepsi manufactures, markets, and sells more than 500 brands in more than 200 countries and territories around the world. Some of the most popular brands, in addition to Pepsi, include Mountain Dew, Gatorade, Lay's potato chips, Cheetos, and Doritos, and water brands like Aquafina, Bubbly, Tostitos, and SodaStream. I'm not going to mention all 500, but that's just some of the bigger ones. Products are very, very popular. Every day, PepsiCo products is enjoyed by consumers more than 1 billion times. So within a week, Pepsi product has been enjoyed by more than the population of the entire planet. Pepsi actually dominates the 200 billion global savory snack market, controlling 22% of the market. It also ranks second as the largest beverage provider in the world, only behind Coca-Cola. Convenient foods accounts for 58% of total revenue, while beverages make up the rest. And right now, the company's North American and international sales are experiencing pretty strong growth across all of its geographic brands and categories. And this has been aided by some of its biggest brands. For example, from 2020 to 2022, which was during the depths of the pandemic, Gatorade expanded at a compound annual growth rate of 13%, followed by Doritos at 11%, Cheetos 11%, Lay's 9%, Mountain Dew 8%, and their eponymous name brand Pepsi 7%. Yeah, Pepsi's growth is also being juiced by expanded omnichannel presence and enhanced digital capabilities. In 2022, e-commerce and away from home sales, which includes delivery, vending machines, things like that, both deliver strong double-digit sales growth. But also, interestingly, through cost savings initiatives, Pepsi also delivered at least $1 billion in annual productivity savings since 2019, which coincidentally started just before the pandemic.
Over the past few quarters, I've been looking at earnings of major companies, and there's a lot of pessimism out there among management. A bunch of companies literally revising their guidance for 2023 and lower. But recently I read PepsiCo reported its first quarter 2023 earnings, and obviously they beat the earnings and they also raised their full year guidance. So if you want to dig deeper into earnings, what's happening there?
Yeah, lots of great things are happening at Pepsi, and it's keeping bullish investors happy. It reported first quarter earnings and revenue beat and also raised its full year guidance. In the first quarter, net revenue increased 10.2% to $17.8 billion. That topped Wall Street analysts' expectations of $17.24 billion. Net income came at $1.9 billion or $1.40 per share, while adjusted earnings were $1.50 per share. Analysts were calling for first quarter adjusted earnings of 138 cents per share. So that's a pretty big beat.
Right.
And again, Pepsi-Cola, along with many other consumer brands, raised their prices to offset inflationary headwinds, which didn't seem to matter. The company average prices rose 16%, which is pretty high year over year, but organic volumes fell only 2%. So obviously raising its prices didn't hurt the company, which has consistently beaten Wall Street estimates for earnings and sales. But going forward, Pepsi management said it didn't foresee taking any more drastic price increases. But given the strong start to the year, management said the company is raising its guidance. PepsiCo now expects to report full year earnings of $7.27 per share, and that's up from a previous forecast of $7.20 per share. It also expects to report organic revenue growth of 8%, which is up from a previous forecast of 6%.
Now let's talk about PepsiCo dividend. I know they're not, high dividend paying company, but they're definitely consistently dividend paying company. So if you want to explain a little bit more.
Yeah, PepsiCo is easily one of the most reliable dividend payers on Wall Street. In May, it declared a dividend of $1.26 per share, which was a 10% increase from $1.15 per share in the same period last year. This works out to an annual payout of $5.06 per share for a yield of 2.6%. Now, a yield of 2.6% might not excite all dividend hogs, but what's also important to note is that Pepsi has raised its annual dividend for more than 50 consecutive years. That means whether we're in a bull market, bear market, stocks are going up, down, sideways, a recession, a pandemic, a war, Pepsi is still going to be there to give you an annual pay raise, which is more than most people could say. In fact, having raised its dividend for more than 50 years makes it a dividend king. So that puts it in pretty rarefied company.
How's PEP stock doing?
Oh, well, and that's part of the joy. You might only have a 2.6% dividend yield, but when it's coupled with a share price that's outpacing the broader market on a consistent basis, that makes it a little more worthwhile. And the fact is, Pepsi has been raising its annual dividend for half a century, and it's been consistently outpacing the S&P 500. For example, PepsiCo has been outperforming the S&P 500 for decades over the last 30 years with the dividends reinvested, which is important. PepsiCo stock has posted total returns of 1,574%. Over the same time frame, the S&P 500 posted total returns of 833%. Again, respectable, but that's nothing compared to what was going on at Pepsi. Over the last 5 years, PepsiCo has returned total profits of 112% versus 52% gains for the S&P 500. And more recently, PepsiCo is up 3% year to date and 14.7% year over year. Again, strong gains, but more gains are expected, with analysts providing a 12-month share price target of $201 per share to $220 per share, which points to potential gains of approximately 8.5% to 19%. And I'm not sure if investors think those are major gains or not, but some respected Wall Street analysts are forecasting the S&P 500 to fall anywhere from 20% to 40%. So it's a totally different growth trajectory.
John, thank you so much for providing great analysis on PepsiCo. Symbol PEP. PepsiCo is one of those companies that has been consistently paying dividends and has raised its dividend for over 50 years. The company is everywhere. Its products are everywhere and has a strong business position in its industry. For dividend investors, yes, it doesn't pay a lot high dividend, but it's been consistent and the share price make up for it. Even in high inflation environment, the company was able to raise its prices but not lose as much sales. That is impressive, and you rarely find that companies able to do it successfully. Thank you for watching this video. We'll be back with another exciting dividend play soon. Don't forget to like this video and subscribe to our channel. We'll be back soon.